Hello and thanks for checking out TheChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey there, MJ traders and investors. We're going to look at Canadian MJ this video. I'll put out the US MJ video sometime tomorrow. So we'll start it off with the big major names. Congrats to the CGC Bulls. This is the break we were looking for. The volume spike was there. We see over twice as much volume as yesterday after the declining volume and the tightening range. We were watching the 4-hour equilibrium tighten up, and the Bulls broke it first thing. And not only did they break it, they gave us convincing follow-through. In the first 20 minutes of the day, we broke every resistance level nearby, including $50 psychological, and we saw some very nice follow-through. So I ended up swinging a position from earlier, and the reason I was swinging a position is I was trading around and establishing a position, knowing this is a daily bull flag, knowing it's a bullish pattern, and knowing that most likely we're going to see continuation. So I had a position earlier, and I added to that position on the break of 47.70, or make that 48.70, which was the clear resistance breaking. As soon as that level broke, a bunch of stop buys were triggered, a bunch of shorts covered, and we saw that follow through. So I ended up treating that position that I entered at 48.70 as a day trading position, and I scaled out into strength, and then still swinging the original position that I've had for a couple days at this point. So we are very clearly, as we have already said, setting our monthly high or low. And that favors the bulls. We were looking at the monthly equilibrium, high, low, lower, high. The higher low happened very quickly. A monthly bull flag is the shape of it right now. And here we are knocking on the door of 51.81. And if we break that resistance level, that is a huge accomplishment for the bulls, because the only resistance level left is the all-time high. The move today and the move, if we can break 51.81 in the next week or two, is going to significantly shift my perspective in terms of significantly shifting the odds that we're going to hit all-time highs this year. The S&P 500 is knocking on the door of all-time highs. Any setup that we see can be derailed by any significant SPY weakness out of nowhere. We know that when the market gets really weak, it happens very fast and it happens out of nowhere. So we're always prepared for that. The number one risk to the MJ sector, in my opinion, is a significant drop in the S&P 500 after the significant bounce we've seen over the last 4 months. But there is no sign of that. So as long as we're just protecting our positions, the bulls are going to continue to thrive in a favorable market environment. So 51.81 is the level, the daily time frame. That's the only resistance level nearby. And then again, we can see after that, all-time high. There's some levels in the 50s here, but not much. Daily new higher low is down at 46.64 on any consolidation. The bulls just want to maintain that level to keep their complete control. And we have an hourly higher low to be watching as well at 49.12 from consolidation. We did end the day with an hourly equilibrium. If this hourly equilibrium breaks bull on Monday, we're going to be looking at 51.81. If it breaks bear, we zoom out to the daily and we say, all right, we have to consolidate on the daily and form a higher low compared to 46.64. ACB, still nothing going on. Just no interest. Again, we're in an environment where we have to wait for the bulls to prove something to us. And the ACB bulls are not proving anything to us. ACB and APHA have been a bit of a pairing, just in the sense that it seems to me like their action goes hand in hand, and Cron and CGC are more of a pairing. If I had to break the sector up out of the major names, that's the way I would do it. So we're seeing CGC and Cron with some upside over the last 5-6 days, and we're seeing nothing out of ACB and APHA. So for ACB, again, we have to see a break of 923. If you break 923, I'm interested. And then I need that follow through of 930 right after 923 breaks to be really confident in that follow through. But if we do not break that 923 level, I have no interest in ACB. And the reason is just a wasted opportunity cost. If I'm a trader and my money is sitting in the name that's going sideways, and we have Hexo exploding the blue skies, we have CGC with a clear bull break, my money, I'm not going to be able to put that to work because it's sitting in a stagnant stock. So there is opportunity cost as a trader, and that's why I would not be looking to scale into weakness and then hope that ACB bulls pick it up, which they have not done out of the last month. So I am watching for it, but again, bulls have to prove something to me for me to have interest. We do have a triple bottom down at 896, We'll be watching that support level, but again, it's all about breaking resistance. APHA following through from the bear break yesterday. Inside bar, bear break, follow through, close down at the low. That low of the reaction to earnings is 755. We broke it by 3 pennies. Not a convincing break, but we did close at the low of the day, so we have weakness heading into next week. If we break that level, we're looking at 750 psychological, and then down to 716, 727 and 716 are 2 little levels. They're not really clear or important, but there's nothing else nearby, so I default to those levels. And the bears have complete control of APHA. We'll be watching to see if we get daily oversold conditions. The weekly time frame is looking for a support level to be established. And again, remember the longer term, the monthly here. We are looking for a monthly higher low compared to 375. There's just no sign that it's been established yet. It's worth scouting for an oversold bounce to potentially be the point where we find that monthly higher low. But again, with so many other bullish uptrends out there in the MJ space, I don't have interest in APHA at this point. Cron, so we have seen Cron follow through with slow and steady gains, 4 days in a row with higher lows every day. We did close over the 12-day exponential resistance. That's a good start. We do need more follow through at this point. We have to be cautious of a weekly bear flag, and we can see pretty much if this bounce over the next couple weeks were to top out in the mid $18 range, we can still go another 5% to the upside and still be a potential weekly bear flag. Just keep that in mind. We have to continue making the bulls prove it to us. This is our hard-earned money, and if these companies want our money in their shares, we have to see proof that they are seeing appreciation. So we have a little bit of an hourly uptrend to be watching. It's nothing very impressive, but we do keep forming these little higher lows. 1606, that actually is a pre-market level, so we'll ignore that. The most important levels for me are the levels that occur during trading when volume is significant and for real, and we can just see every little higher low that we keep forming on the way up. We did break 1717 and got some follow through over that. We have a bit of an hourly equilibrium similar to CGC. The next resistance level is up at 1765 and then 18 psychological. We don't really have a clear daily trend change. This move is coming off of the low, so we don't have one of those distinct higher lows and higher highs that has us able to say that's a clear daily trend change. So what I would need to see is a top out, wherever we top out on this bull move, and it's probably going to be somewhere along the lines when CGC loses its momentum. We'll be watching for Cron to potentially consolidate as well, but we're going to look to top out perhaps in the upper 17s, maybe the mid 18s. We'll have to see what CGC does, but then we have to pull back for the higher low compared to the bottom of 1555 and then change that trend. Keeping in mind that news can drop at any moment, as always, but when you have a name like Cron where you know they have a big reserve of cash and you just saw CGC play around with the USMJ space, you know that that news can drop anytime on Cron. For me as a trader, that's never a reason to get into a name and then just hope we get news. I mean, think about that strategy for APHA or ACB, looking for a deal like we got with Cron and CGC, and that just hasn't come. And that's months and months and months of, again, money that could be put to work at other places. So it's worth keeping an eye on Cron. The bulls have a lot of proving to do for me to be comfortable with a shift in momentum. That has not happened yet, but we're certainly keeping an eye out, and the bulls aren't complaining with the slow and steady action over the past week or so, considering what we've seen in the previous month. TLRY, increasing bull volume. We got a clear break over the 52.55 top that we've seen over the last couple weeks. So again, we don't have a clear, distinct trend change. This is coming off of the low of 47.68. So we are going to anticipate that we are going to top out and form a lower high. The last daily lower high is looking all the way back up at essentially 66.40. So we are looking for this bounce. Look at the weekly. Again, possible bear flag. It is a possibility that we have to be aware of over the next couple weeks. But we need a more significant bounce, and then we need a clear daily higher low and higher high to change the daily trend. This bounce is not changing the daily trend. It's just a slow fade up. Again, the bulls are not complaining, but it's not a clear daily trend change. We have an hourly higher low at 51.72, and we'll see if the bulls can break the high of today, first thing on Monday, to see this bullish momentum continue. OGI. So OGI is continuing to fade. We have not found our daily higher low yet. We have our low of 840. Our high of the bull move is 919, and now we're looking for a higher low compared to 840. So we have to see an hourly trend change to indicate the daily higher low has been established. Today we had a bit of a fake out. First thing this morning, we broke resistance by a couple pennies and then instantly pulled back. That break did not last long at all, and then as soon as we hit a new low of the day after that supposed resistance break, we broke 890 by 2 pennies. 15 minutes later, we're back at the low of the day. There's your big red flag of a lack of any follow through, and that tells us the daily higher low has not been established yet. So on the hourly time frame, we've got resistance at 879 and support is 867, and the next support after 867, we're going to be looking down at that 840 level. So bulls really need to show up Monday or Tuesday to try and form this daily higher low, because the possibility of seeing this weekly pullback continue is still present. OGI bulls have not done a whole lot, as all of the tier 2 attention is on Hexo, and for good reason. Look at that volume. That is big time volume. That's $85 million on the US side. Very rough number, but over 80 million. Huge volume. Looks like the all-time high just about, and the all-time high price and all-time high volume. So the daily chart is extended, just in the sense that we have not formed a higher low since 588, but blue sky breakout, things can get very extended, including RSI levels. So this is a reaction to the upgrade that we saw, and we keep seeing Hexo now being lumped in with the big boys. We're seeing an upgrade. I forget the name of the company, but we had CGC, ACB, and Hexo as upgrades over last night, or I should say initiation of coverage. But either way, it's starting to get named with the major names. It's starting to get traction, and stocks is a bit of a popularity contest in terms of getting attention of traders and investors. And when you see significant price action and you're mentioned with the most popular kids in class, you're going to get that attention, and that's what's happening with Hexo, and we closed extremely strong. The hourly time frame, our higher low is 752 and 762. We got the bull break at the end of the day and a little bit of follow through now after hours at further all-time highs. 8 psychological will be resistance on the US side of things, and the bulls are in complete control. And we know that the next time we lose the hourly uptrend, we're just looking for a healthy daily higher low to form to keep the bulls in control. And that can happen anywhere above 588. So we know the daily uptrend is going to very likely continue at least through next week. TRST. So TRST is fading back down. As we know, we have to change the daily trend with a higher low and higher high. So we have topped out on our bounce now. That's at 1024. And now we're pulling back. So we have to hold 882 and break 1024 to change this daily trend. We need to change the hourly trend to tell us that our daily higher low has been established. Anything under 1024 is just a lower high, and we have to patiently watch for that hourly trend to change, because it is possible that we do just drop down to lower lows. It all depends on what the volume looks like for the bears to start next week, but worth scouting to see if we get an hourly trend change in the mid to lower $9 range, and then a move back towards 1024 key resistance. VFF. So VFF had a little bit of a fake out as well. We started the morning strong, and it looked like our 4-hour higher low had been set, and that move faded away pretty quickly. So there's our bull start to the morning. Very clear correlation with CGC. And this is the first time I'm looking at the 5-minute today on VFF, because I was focused on CGC and Cura today. But let's just look at this correlation and then watch how it fades, where we have the same bull move on VFF and CGC. CGC got a new higher high, VFF did not, and then the consolidation took us all the way down to the low of the day, and we broke to a new low of the day, while CGC was not close to hitting a new low of the day. So very clearly correlated, but it's the kind of correlation that greatly favors the CGC bulls and the VFF bears with how we were reacting in the same way. So where we stand right now, we're still in the 4-hour equilibrium. That fake out and the lack of correlation and strength with CGC is a bit of a red flag for bulls. If we were in a 50-50 in this 4-hour equilibrium as to which direction it's going to break, that now shifts it to 60-40 bearish to me, just because we saw that lack of follow through. So we still are in this pattern, and we can still hold 1459 and head back on up. It was just a failed attempt to do so today. So 1459 is the most important support, 1698 is the most important resistance, and as long as we're trading within those two levels, we are still in the 4-hour equilibrium. I would not be surprised to stay within this range on Monday, and we're going to be looking for a break probably Tuesday or Wednesday. T-God on the daily chart, holding on just fine, pretty much trading sideways. inside bar today. If the inside bar breaks bullish, we have multiple inside bars, so we know it's a very tight hourly range. But if the inside bar breaks bullish on Monday and we break 427, the bulls want to ensure a break of 435 to have follow through and to believe that move, and that would tell us we have not topped out yet on this bounce, because this bounce is coming from the low of 390 and we have not consolidated as far as pulling back for a daily higher low yet. If we break bearish and break below 418 and 417, that tells us we're now consolidating to form the daily higher low, or I should say to attempt to form the daily higher low. This is that chart where I drew the 4-hour potential inverse head and shoulders pattern, and that is potentially still in play. So we saw the one with ACB a while ago that did not follow through, but essentially what it is just lower highs and lower lows, and then we have to form a higher low on the right shoulder and then break to higher highs. So 435 and 447 need to break. This is very healthy 4-hour consolidation at this point. It's just a question of how these inside bars on the daily time frame break. Do we have to form the daily higher low early next week, or can this bounce see continuation with only sideways consolidation and not a pullback? VGW, getting into the extraction names now, subsectors. So we've got our major Canadian MJ names, we've got our tier 2 names, we've got our extraction plays, and right now VGW continuing to all-time highs. I think we got another upgrade again after hours today, and that was the case over yesterday's video. At the end of the day, we got an upgrade, and I think we have another one. But we have a bullish follow-through move, higher highs. Resistance is 481, and then 490 and 5 psychological. The hourly uptrend to keep the bulls in full control, it looks like it's on the verge of breaking. If we break 458, which is a triple low on the hourly, that tells us our temporary top is set, and we have to form a daily higher low. Anything above 4, make that 389, is a higher low on the daily time frame. So the bulls are comfortable in the daily uptrend, and we're just watching a tight range. There's our 15-minute equilibrium. All-time high, low the pullback, lower high, and we did drop on some volume right down to support at the end of the day. So 458 is key support. If it breaks, we zoom out to the daily to look for the higher low, and resistance is 476 and 481. Oils is still seeing some contained consolidation from its all-time high. It's a tightening 4-hour pattern where we have our 68 double top. We have our low of consolidation of 455, our lower high of 62, our higher low of 51, and now we're just real tight. I'm saying 51 and 56 are the most important short-term levels. If we break 56, we want to see a break of 62 shortly after to get the bull spike in volume and the follow-through. And if we see a bear break of 51, we're looking down at 455. So another 4-hour equilibrium that's tightening up, and you can see it on the daily time frame as well. Still riding the exponential 12-period supports. The volume is completely dropping off, and when this 4-hour pattern breaks, there will be a volume spike associated with that break, and we'll anticipate that on Monday or Tuesday. LABS, also in a tightening equilibrium pattern. So we have our high, low, lower high, and we're scouting for a higher low compared to 481. The hourly RSI, if we drop down into the low $5 range on Monday, we're going to be looking at this hourly RSI close to oversold. And as I talked about in the video yesterday, hourly RSI oversold when looking for a daily higher low in an uptrend is a good place to begin scouting for a potential entry point. So the 12-period exponential has held the last couple periods of consolidation. We're going to be right on top of that on Monday, and we'll see where those RSI levels get to. The close at the low of the day has us looking at the potential that we do need to pull back into the low $5 range still to find that daily higher low. NEPT. So bulls trying to put a stop to the bleeding from yesterday. We need an hourly trend change. We don't have it yet. 394 is a double bottom, and we now need to see a break of 407 and 408. So double bottom and a break of 407 and 408 would shift momentum, and that would change the hourly trend, giving us the daily higher low. So it's all about that hourly. The daily time frame's looking just fine at this point, and we'll be watching how that tight pattern on the hourly breaks on Monday. CXXI, so daily trend change attempt is underway. We need follow through on Monday. Low of the pullback is 141, high of the bounce is 180, higher low is 148, and we have to break 180 to change this daily trend. If we change the daily trend, we zoom out to the weekly chart and we defend that support with that double bottom, keeping in mind, again, the head and shoulders pattern is still going to be alive and possible for the foreseeable near-term future. We have to see convincing bull volume. Really, if we could break 180 and 198, that would decrease the odds of that head and shoulders a good bit. But as you can see, that's the left shoulder, the head, the neckline is at the same level. And if we were to bounce and top out around $2 and then fade back down, we would have to be cautious of a shift in momentum on the longer term time frames. At this point, we're not worried about that. First things first, daily chart has to change the trend for the bulls. And we have to see a break of 180 on Monday. SPR. So red flag on SPR. That's a red Marubozu candlestick. And to see that after such a clear bull break of a tight pattern is a big red flag. You always want to see follow through. We saw follow through with ZYNE on its clear bull break of the equilibrium day after day. Follow through is necessary. Otherwise, you start to put doubt in the bulls who take profit. You start to give confidence to the bears who might jump in short. But essentially what we've got is a big bull move. The faster you run up, the faster you can pull back. And we just did not really have any support to go off of. And as soon as we broke 91 cents, the lack of support took over a bit. So if we look on the 4-hour chart, we are still going to look for a 4-hour higher low on declining bear volume. Bulls need to show up Monday morning and maintain 84 support. So potentially looking for a higher low compared to 84 on Monday. But it's the kind of pullback where we're certainly not going to anticipate just straight up continuation over 101. It's going to look like we're going to have to trade in a 4-hour range. If we can form this higher low, we'll look for a bounce and probably a lower high compared to 101 and a tightening 4-hour range to start next week. That's assuming we can hold 84 support. Bulls need to defend that on Monday. KHRN is not Canadian. It's not US. It needs a home. So we'll give it to the Canadians. They're always welcoming. So we've got KHRN needing to change the daily trend as well. They did it yesterday with no follow through, and that was a big red flag. Good sign for the bulls that they formed a daily inside bar today. It's a bit of a recovery from that big rejection. The hourly time frame shows us the equilibrium, 336. Let's draw it out here without these confusing lines. So 336, 302, 322, 313. So 313 to 322 is currently the range to be watching. And if we start to take out these supports, we do need to be very cautious because, again, we got big red flags yesterday for the lack of any follow through. And if we start to take out hourly supports, we're going to be headed back down to 298 and then potentially 278. So a trend change with no follow through, not ideal. Have to break that hourly equilibrium bullish to give the bulls another chance, essentially, to try and get that daily follow through. So that's where we stand overall. CGC, the sector leader, is giving the bulls in the sector, both US and Canadian, some nice momentum. We've got the S&P 500 at all-time highs, also adding to the nice momentum. And again, when we are in an environment in the S&P 500 where we're going up or trading sideways, that allows the Canadian MJ bulls to move freely. If we are pulling back on the S&P 500, there's extra downward weight on the sector that we need to be aware of. No sign of it. So we'll see if these gains can continue. And if CGC can break that 51.81 resistance level next week, it's going to be a really good thing for the sector as a whole. I appreciate you watching. Hope you do good things this weekend. It's going to be a good one out there. And we'll check back in tomorrow with the USMJ names. Did a little walk around the yard to capture some flowers while they're blooming. And in the near future, we'll go over some planting of tomatoes, cucumbers, and all the good things that we get to eat. See you soon.